Welcome to the StockInvest.us YouTube channel, where we explore fascinating stories and trends in global markets. Today, we're diving into the Burger Index, or as it's officially known, the Big Mac Index, and uncovering what it tells us about currencies and the cost of living worldwide. How can a simple burger reveal the economic health of nations? What started as a light-hearted comparison by The Economist in 1986 has become a surprisingly insightful economic tool. Let's start with the basics. The Big Mac Index is an informal way to measure the purchasing power parity between two currencies. It uses the price of a McDonald's Big Mac burger, a product available in nearly every corner of the world, as a benchmark. Why the Big Mac? It's standardized. The ingredients, preparation, and branding are consistent globally, making it a simple but effective way to compare the cost of living and currency value across countries. Here's how it works. If a Big Mac in the US costs $5.50 and the same burger costs 20 yuan in China, the implied exchange rate is 3.63 yuan per dollar. If the actual exchange rate is higher or lower, the index indicates whether a currency is undervalued or overvalued against the US dollar. The Big Mac Index was introduced as a fun way to explain exchange rate theory, but over the decades, it's gained credibility among economists and policymakers. In 1986, when it debuted, it highlighted significant differences in currency values between the US and countries like Japan and Germany. Over time, the index has been refined. For example, The Economist introduced adjustments for local GDP to make it even more accurate. What started as a cheeky economics lesson has become a regular feature in financial discussions. So, what does the Burger Index tell us about the world today? In Switzerland, Big Macs are among the most expensive, reflecting the Swiss franc's strong valuation. In India, Big Macs are significantly cheaper, partly due to the rupee's undervaluation and lower local production costs. Fun fact, in India, the Big Mac is made with chicken instead of beef. As the benchmark, US prices are used to gauge other currencies. The index highlights global economic disparities, where countries with undervalued currencies may attract tourists looking for cheaper goods and services. Of course, the Big Mac Index isn't perfect. Critics point out that not everyone eats Big Macs. Local diet preferences can skew the data. Additionally, the index doesn't account for goods and services that aren't globally traded. It oversimplifies broader economic realities like inflation and labor costs. Still, it remains a useful, tongue-in-cheek indicator for anyone curious about global economics. You might be wondering, what does a burger have to do with investing? The Big Mac Index offers a unique perspective on currency risk. It can help investors identify currency misalignments that could affect international investments. Thanks for watching. Don't forget to like and subscribe for more fun insights. Let us know in the comments. Do you think the Big Mac Index is a reliable economic tool or just a quirky fact?